Well, we're back with you on the Market Day Report. Lots to talk about today on the grain market side. Well, we have the corn market actually not going very far from unchanged, even though we had some good export sales overnight. We can take a peek at those. And then we also had some outstanding ethanol production numbers. Let's recap those real quickly here, and then we'll get into your futures trade. On the overnight export sales, well, we had basically 110,400 tons that were sold to unknown destinations. This is corn we're talking about. It was for the current marketing year. So that should have been a little bit helpful to the corn market. Also, we had some news of ethanol production, which was just beyond compare. It's the highest ever. And we had some tremendous ethanol production reported last week. The total last week came out to an amazing 1.054 million barrels per day, exceeding the previous record the week before of 1.049 million. And the 4-week average all the way up there now at 1.044 million barrels per day, another all-time record there. Ethanol stocks relatively high, though, at 21.1 million barrels. No imports last week. Let's go to the trading floor in Chicago and find out what's driving the trade there. Let's check in with OliverSloup. He's with iiTrader. He's there at the edge of the trading floor. Oliver, from your perspective there at the trading floor today, what are the traders talking about?
Well, it's a little bit quieter. We've seen a lot of volatility throughout the week. Things seem to be calming down a little bit. Really started in the overnight session, pretty tight ranges across the board. Soybeans are obviously the market of interest for a lot of not only traders and speculators, but producers as well, as we've had this massive rally higher. And I've seen a lot of retail guys try to step in and short this market. And I've got to remind everybody that, picking the top is a lot like picking a bottom. It's a process, not a point. It can be very dangerous and painful if you're not using good risk management strategies. Now, with that said, we are still in a bull market for the soybeans. 10.59 3/4 is going to be a key level of support. On the top side, if we can get out above the recent highs yesterday, I think that opens the door to more buying from the funds, pressing us towards that $11 handle, which is also the July highs, which came in at about 10.96 3/4. So as it stands right now, funds are a big factor, as well as weather.
Okay, soybeans right now, we were just looking at that on the big board here, and we can bring them back up for everybody. March soybeans currently down, well, they were 3.5 lower. Now they jumped up a little bit, so they're down 2 1/4. Last trade now 10.72 3/4 per bushel, still about a nickel away from our high of the day. They're about 6 cents off of our low. May soybeans down 2 3/4 at 10.81. Now back on the corn trade, we were talking about the big, overnight export sales that were reported in the colossal ethanol production last week. And yet we only got a bounce of about a penny out of the corn. March up 1 1/4 at 3.66 1/4. Was that kind of a disappointment to the trade there?
I think corn's trading a little bit in tandem with the soybeans. The weakness in soybeans is keeping corn kind of somewhat subdued despite that pretty good number. We're right up against those October highs at 369. If we're able to get out above that, I think the chart is set up very constructively to have a breakout, another 20 cents higher, really. We have been making higher highs and higher lows, which is very constructive. Obviously, the bean market is going to be a big factor. South America weather, as well as the U.S. dollar, which seems to be kind of in a topping out phase. And if that continues to play out, I think that should be supportive of the grain markets.
All right. What about on the wheat side there? We've seen big divergence in the wheat market between Chicago and Kansas City going lower, Minneapolis going higher today, and it seems to be kind of extreme today.
It's like people have a blindfold on and are just throwing darts out there. There's a big divergence, as you had mentioned. We're watching Chicago the most closely. 421 is a good support level for us to look at, adding some long exposure as the 20-day or the 100-day moving average. Sorry, and if we're able to get out above the recent highs, 437, I think that opens the door. We do have funds with a net short position, so if we are able to get out above resistance, I think we encourage funds to cover and really press this market up towards the next levels.
All right, Oliver, thanks for all the update. I want to bring you back here in a little bit, and we'll talk a little livestock trade as well. We're talking with OliverSloup of iiTrader. We'll be back right after this. Oh, we're going to rejoin our conversation here with OliverSloup of iiTrader in Chicago, and he's right there at the edge of where all the activity is there at the trading floor at the CME Group. Again, thanks for joining us here, Oliver. Appreciate that very much. As we look at the livestock side of the ledger here, of course, basically this morning when the traders came in, about the only thing they had to go by for guidance other than the wholesale meat market was the fact that we had that Fed cattle exchange yesterday, and that indicated a higher trend, over $1 higher than a week ago. And then we were hearing this morning the bids were being bumped up $3 or $4 by the packers. So far, the live cattle, they responded positively when all that news came out, and they have been hanging on to those gains for the most part today. February live cattle up 90 cents now at 121.18, and April 62 higher at 120.02 per hundredweight. Now, the nearbys are leading the charge higher, and also on the feeder cattle side, we have had similar type of action there. Nearbys leading the charge. The March, for example, up 57 at 130.12 per hundredweight, and the April up 42 at 129.50. This, as you were talking about on the grains, where we have been hovering around some very stiff resistance overhead. Can they bust through or not, in your opinion here?
Yeah, I think there might be a little more juice left in this market. Looking at the live cattle, we've kind of talked about the 122.75 level being a big target for us for that February contract. That is the March highs, which is, is almost a year ago. So very significant to us. And not only is that a big resistance level, but the RSI, or the Relative Strength Index, is also starting to get signs of overbought. So we might start to see a little bit topping out up here, and I wouldn't be surprised to see that at all as we round out the week, even if we do get a strong close today.
Okay, now let's take a look at the lean hog trade as well today. So far on the futures board, now we have everything higher across the entire complex. Now, we did have a mixed trade earlier today where we had some contracts higher, some a little lower. Right now, everything is more uniform. We have February lean hogs now at 65.42 per hundredweight, so they're 22 cents higher than where we closed yesterday. And the April contract up 28 cents right now at 69.10. Do you think we can hang on to these gains through the finish line today?
I hope so. The chart looks pretty good. We have been kind of trading in a range, but that range is really consolidated quite a bit, forming a little bit of a wedge where you have lower highs and higher lows, and we're looking for either a breakout or a breakdown. If you pull the chart out on a little bit longer term, I think that it bodes well for a breakout, and the target we're looking at is that 70-20 level, which is last year's highs, and I think that's going to be a big line in the sand for the bears to defend. I don't think it has enough momentum to really get out much above that, but I do think that is definitely in the cards here over the coming sessions and weeks.
How current do you think we are as far as supplies coming from the packers there on the pork side?
It'll be interesting to see. I've been hearing a lot of rumors across the board, so I can't really put too much emphasis on either way there.
Okay. And then, of course, we have been watching hog weights. Have they been coming up or down this past week?
Again, I've been hearing a little bit of both, kind of a mixed bag, and I think the market is really responding to that as we consolidate in this wedge, waiting to see, what the consensus is. As it stands right now, I don't think there's really been a whole lot of change over the past week.
So, in essence, Oliver, what you're saying is it totally matches what's going on in the futures trade, too. Huh?
Exactly. Bingo.
All right, so a little bit all over the place. Oliver, good to visit with you again. I appreciate that very much. Hope you have a great weekend if I don't talk to you before then.
Thank you. You too.
All right. OliverSloup. He is with iiTrader in Chicago. And let's bring Oliver back. We'll talk to him on the evening news tonight, too.
Yeah, and then you have your commodity wrap show coming up tonight as well to look forward to. Okay.
Lots of good stuff coming up, yeah.
Thank you so much, Markets Editor Marlon Bowling.